In today's video, we're going to go over 3 money rules that the rich know and the poor don't. Hi everyone, my name is Helen. Welcome to my channel. In today's video, we're going to be going over 3 money rules that the rich know and the poor don't. So if you like videos like this, please remember to like and subscribe since it helps the channel to grow. The first rule that you need to keep in mind when it comes to the wealthy is that they choose their friends wisely. Now, there is a saying that you choose your friends, and that is very much true. When it comes to your friendships, your relationships, the people that you bring into your life on a regular basis, you want to choose those individuals wisely. Now, what do I mean by wisely? I mean, you want to choose people who have common interests, common goals, and who are working toward the same thing. They have the same type of motivation. Now, when it comes to finances, you want your friends to be on the same page as you. You don't want a friend who is going to drag you down because they're telling you all the time, no, you can't accomplish that. You won't ever reach there. It's not possible to get that goal. What you want are friends who are encouraging and motivating and reaching toward the same goals. In that way, you are all helping each other lift up your finances together. You're all working toward the same goals. You're talking about, oh, how can I work on this particular goal together? So you're problem solving together. You're finding ways to reach your financial goals together. Maybe you're even looking into business opportunities together, or you're looking at potential investments that everyone can jump on, depending on what type of investment it is. So for example, if you have friends who are talking about how they invest in, let's say, the stock market, or they're investing in real estate, or they're investing in cryptocurrency, these are good friendships to have when it comes to your finances, because you are able to learn about different types of investments from those individuals based on their experiences. So if you have a friend who is investing in real estate and that's their area of interest and their area of expertise, if you are thinking of investing in real estate, you're able to ask those people about their experiences. What things could they avoid if they could? What type of investments are ideal for beginners? These kind of questions are very easy to ask of someone who has that experience. But if your friends have no experience in real estate, or they don't have any experience in the stock market, talking to them about these subjects might not be beneficial to you or to them. So it is very important that when you're choosing your friends, you really opt for friends who have common goals and common interests and who are working towards similar outcomes, because those individuals are going to really help you on your journey. And they're the type of people that if you need help with something, they will know the answers to those questions, or vice versa. If you know something that can help them, you're able to provide that help for them. Now, you want to keep in mind that when it comes to your friendships, you have a certain amount of control, and the friends that you choose are going to either help you or they're going to hinder you depending on what their life situation is. You don't want to find yourself in a situation where all of the friends that you have are discouraging you or telling you that something is not possible just because in their personal experience they think it's not. When it comes to your friendships, you want to keep in mind that what your friends encourage for you and what your friends are telling you to do, those will all impact the way that you spend money or the way that you save money. So if you have friends who are telling you to buy the latest trends or to spend frivolously on things that you don't even value, those are not necessarily friends you want to maintain. Those friends are going to really just harm your long-term goals. If you have friends who are, on the other hand, encouraging you to save money, telling you, no, you don't need to buy that new purse because that's not going to help in your life, or you don't need those new shoes, you have a lot of different shoes that you already have, so there's no point in buying new shoes until you need them. Or working with friends who are telling you, hey, don't buy that new car, instead buy a used car because it's going to save you a lot when it comes to depreciation. When you have friends who are encouraging you to reach your financial goals, they're going to help you long term, not because they're necessarily involved in your finances directly, but because they're not trying to get you to spend money that you either don't have or don't want to spend, or that you simply don't value the things you're being told to spend on. So Choose your friends wisely. Make sure you pick friends that are working with you to help you accomplish your goals, or at the very least are not detrimental to your goals. The next money rule that you want to keep in mind that the rich know and the poor don't is that you need to budget wisely. Now, budgeting is one of those things that is really a little bit complicated for some people and very easy for others, because it really depends on how you're going about it, what your lifestyle is, and how your spending already is. Also, it will impact the kind of debts that you have. So if you have a lot of student loan debt, credit cards, car loans, other debts, that will greatly impact the way that you manage your budget. When it comes to the wealthy, they have a tendency to live well below their means. That means that whatever amount of money that they're making on a monthly basis, they are spending far less of that money when compared to their expenses. So if they have loans, mortgage, rent, whatever kind of expenses that they have, obviously food, clothing, the basic necessities, whatever they're spending in those necessities is going to be far lower than whatever they are taking home in their pay. And they purposely set up their budget in that way. So planning a budget that gives you room for spending for your necessities, so your rent or mortgage, your clothing, your basic needs like food, all of these things are put into your budget. And then whatever amount that you have extra for disposable income, let's say you have $100 a month extra. Instead of spending that frivolously or buying things that you don't really need, you build up an emergency fund, you put that money into investments, and you let that money grow. Now, of course, the amount that you're able to live below your means will depend on your income and how much your expenses are. But if you get your budget under control, it will greatly help you in your financial journey. The final rule when it comes to your money and what the rich know and the poor don't is that you don't keep your money in the bank. Now, when it comes to wealth, you're not going to make money by putting it in the bank. The bank is not the place to put your money when you are trying to build up wealth. Now, of course, you do want a certain amount of money in the bank for ease of access. So you want to have your emergency fund in the bank and maybe a couple of months worth of your bills, just to make sure you always have a little bit of money ready for when you need it. However, anything that goes beyond your emergency fund and maybe a couple of months of extra to pay your bills that particular month, you want to be moving it into some kind of investment. The wealthy do not keep large amounts of money in the bank. In fact, that is a rather foolish thing to do, because the bank does not give you anywhere near enough interest to make up for whatever losses you would have if you don't invest in other areas. So generally speaking, the bank is the place to put your emergency fund, ideally in something that does have some kind of interest generating, or a little bit of extra money for paying your monthly bills. It should not be a place where you're putting the majority of your money. The majority of your money, when you are wealthy, should be going into some kind of an investment. So whether you want to invest in real estate, or you're thinking about investing in equities, or maybe you're thinking about investing in cryptocurrency, it really doesn't matter where you're planning to invest. You want to put more of your money into whatever you're planning to invest in, ideally a portfolio that is well diversified, rather than putting your money in the bank. The bank is not going to generate any kind of income for you. And in fact, the goal of the bank is to make money for the bank. So they take your money, they lend it out to other people, and they generate interest on that money from the loans that they've given. That is how a bank operates, and they don't give you a large percentage of that return. They only give you a very small amount of whatever they are getting in return for lending the money. So rather than being the person who's keeping all of your money in the bank that you're not getting any kind of interest from, put your money into something else. Put it into some kind of investment. If you are particularly risk averse, you can consider bonds or maybe an index fund, which has a large number of stocks. In that way, you're able to kind of diversify your risk and keep your risk relatively low, but you're also generating returns over time that are compounding and helping you build up your wealth. That is the trick that every wealthy person knows is very important and even vital if you want to build up wealth. You need to be investing your money rather than keeping it in the bank. That's it for today's video. If you guys like this video, please subscribe, and I will see you in the next one.